Hi, I'm Evan Small with Pulse Realty. I'm here speaking with Beth Gunyer of Evergreen Home Loans. We're trying to take a little bit of the mystery out of the home loan process. A lot of the people thinking of buying a home are doing it for the first time. So Beth, how hard is it to get in touch with a home loan lender?
It's actually quite simple, Evans. You're going to click on the link right below the video and you're going to contact Beth Gunyer at Evergreen Home Loans.
Wow, right underneath this video. It doesn't get any easier than that. And once they get in touch with you, do they generally come into the office or do they do most of this over the phone?
You know, we're there to be convenient for you. If you need to do it over the phone, we can do it over the phone. You need to do it by email and going onto our website, we can do that. You want to come in, you want to talk to me and sit down behind a desk, great, we can do it that way too. Whatever the client is most comfortable with.
Now, in that first meeting, what sort of questions are you going to ask and what sort of information will you need?
What we're looking to do is we're looking to do a pre-qual, and we want to make sure that we get the basic information to start the loan application. And on that, of course, we're going to get your name. We're going to ask you if you're going to be the single person on the loan or if you're going to do it jointly with somebody. Then we're going to need both parties' information. We're going to ask questions like your social security number, your date of birth. We're going to ask about how much you make a year, what your salary is. We're going to, of course, we want to get your current address. Then we're going to be running a credit report. And on that credit report, it's going to tell us, what your loans are and how much money you might owe. And it's also going to give us a score.
Now that score is called the FICO score. For the standard loan programs, FHA and or, what's the other one called?
Conventional.
There we go, conventional. What scores do they need to qualify for those?
Well, I'm not going to say that you absolutely have to have a certain score, but typically FHA is looking for 640. Conventional, you might be able to go a little bit lower because you're going to have a bigger down payment on that one. So it can, vary. However, let's say that your credit is less than perfect, and a lot of people in today's society has less than perfect credit. Don't think that we can't work with it.
Oh, so you'll be able to help them bring it up a few points or several points?
Well, we can guide them and show them what we need to do to get their credit scores to raise, yes.
Okay, so they will have to do the work themselves. You'll just lead them through the process.
Absolutely.
So they're going to have to be adults. Now, what are some of the major do's and don'ts once you've gotten your loan applied for, and let's say you've gotten the okay, the pre-qualification letter. What are some of the best things you can do in that circumstance?
Okay, and that's a great question, Evans. Thanks for bringing that up, because a lot of people think that once you've gone through the loan process and it's in underwriting and you've already picked out your house and you're starting to pick out your furniture, and guess what, maybe I need a new car, or maybe my daughter's going to college and we need to co-sign for her to get a vehicle. Hold it right there. We have to stop. We need to realize that we can't make any subtle or large changes because everything needs to stay consistent through the process of until we close that loan and it goes through and it actually gets funded.
Yeah, as I often tell my clients, if that refrigerator's on sale while you're in escrow, it's going to be on sale after you close the home too. So they don't have such things as once in a lifetime sales.
Correct.
And vehicles, you just nurse your current car through the period and then you can go ahead and buy a new one.
If that's what you need to do.
Yeah.
And one thing I do want to bring up as well is a lot of people, maybe they have a second job, or maybe they have one job they prefer over the other one and they're getting ready to make some changes in their employment. We ask that you wait on that as well. We need to have a continue 2-year history at least for their employment history, and not to mention those pay stubs we still might need them. So we need to have constant income coming in.
Yeah, you do generally require updated information throughout the process. And I've even heard of confirmation of employment the day you're signing the loan.
Correct.
Yeah.
Yes, that.
So no major changes. So the do's are easy. Keep going with the good stuff. The don'ts are easy too. Don't buy anything major. Pay cash for whatever you buy.
Yep.
And don't quit that job.
Yes.
Now, we did mention 2 loan programs. We have the FHA and conventional. Could you briefly describe the difference?
The FHA loan is typically for a first-time home buyer. Now, they're going to come in with more likely 3.5% down on the house. And of which that 3.5% could be a gift from a relative.
Oh, that's nice.
It's very nice. That first-time home buyer, I mean, they could be needing the money. Who knows? They don't even have a savings, but they have a gift, and that helps.
And then the conventional?
The conventional is more of a loan for a person who has a little bit of a savings to put down on a house, 20%.
And what is the advantage of putting down the 20% versus the FHA loan?
Well, that 20% helps that person not have a mortgage insurance.
Oh, and that can be expensive, I know. I've seen it run $100 to $150 a month for some of my recent clients.
Absolutely.
So that's a major savings if you can afford the 20% down.
That's right.
Now, after we've pre-qualified for the loan, or the client has, you'll give them a pre-qualification letter, which they will bring to me. We'll then go on the multiple listing service. We'll search for homes that they have a desire to look at. We'll go out and look at a home. We'll write an offer. Let's assume the offer is accepted. Then what do we do?
At that point, we're going to come back in. You're going to see me. We're going to get all of our ducks in a row. We're going to make sure that any documentation the underwriter is asking for is updated and ready to go so we can get that loan funded.
So that documentation is going to mostly be confirming jobs, also confirming the path of money. So your income statements will be necessary, your W-2s, and then of course if there's a new tax year coming up, you might even have to provide that.
Correct. And not just that, but just because you have gone out and you've already picked out that house, that stuff can start earlier than that. We can start gathering information before you even go to look at the house. So once we start the process with a pre-qualification, you can start slowly gathering your stuff so we can keep your file constantly going.
Oh, that's a good idea. So then we can plan to close in, say, 30 to 45 days after the offer's accepted.
Yes, we're ready. We can send it to underwriting the next day if it comes to that.
Great.
So.
And once the property is recorded, of course, the buyer gets the keys.
Yep.
And what's the next thing they're going to hear from you about?
Actually, it's going to be your relative and your friends. Those are going to be the next people I hear from.
Yeah, so you're going to want the referrals.
You got it.
Good. So not only are you easy to contact, you're easy to deal with, and you're very cooperative throughout the process. So is there any reason they shouldn't feel free to call you at any time?
Anytime.
Good.
Anytime.
And where can they find that information again?
Right below this video. Please click the link. And you can catch me at evergreenhomeloans.com/Beth Gunyer.
Great. Thanks a lot, Beth.